technology that's new like this, it's easy to get excited about, hey, this can make things easier, and it does, and
Yeah.
that's. But I think there's also we're still in the phase of figuring out how should we adopt this? What should we use it for? What should we not use it for?
Yeah.
Those are the questions I think we're going to be, all of us, grappling with for a while.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Hello and welcome to the Bull of Wall Street podcast. I'm Jim Worden, Chief Investment Officer for the Wealth Consulting Group. Super delighted to have joining me today Dan Gallagher. He's a technology columnist for Heard on the Street. That's a column in the Wall Street Journal. This is looking at market analysis and opinions. And the crazy thing is Dan and I are actually from the same small town, real small town in between Lake Tahoe and Sacramento. But super grateful to have you join us, Dan, and let's get the party started.
Thanks for having me. Good to bring the El Dorado Mafia back together again.
And you also went to BYU too, right?
I did. Feels like but yes.
BYU, and I did BYU Hawaii. So we're both Cougar fans, but looks like we didn't get past round one in March Madness this time. So,
well, you had much better winters out there for sure.
oh, for sure. So Dan, let's talk technology. You have been following technology for a long time, and you've been analyzing a lot of these companies, and technology is really kind of at the epicenter of what's happening with the markets. A lot of it, aside from Iran and the conflict, but there's big focus on AI and Nvidia and what's going on with the hyperscalers, Apple and Amazon and Microsoft and Meta and Alphabet. So like a lot going on there. And you've kind of seen this journey unfold over time. Tell us what it's like, and tell us kind of what your inside scoop is. As you've kind of gotten to know these different executives and how they work, how they operate, and how this landscape has just changed from, maybe like 6 years ago until now.
Well, I go back even further because I kind of stumbled into technology journalism graduating college in the mid 90s. And that was I came into it during the rise of that first .com bubble. Netscape had gone public. Companies like Cisco were all the rage. Microsoft was, of course, huge then. And so it's been interesting to watch the evolution in a broad scale of how technology kind of rises and falls. Like you have a big technology transition, it drives investment bubbles, they pop, new ones come in. It's very much a cycle. This particular one is interesting because I've been covering Nvidia now for a long time. I like to joke long before anybody else cared about them.
Yeah.
There were other journalists at the time too, but basically when they were essentially a video game chip company, that was their business. And then, so it was interesting to watch how in in some ways they're not that different in terms of how they behave and how if you talk to Jensen 10 years ago, way before ChatGPT launched, way before anybody really even knew it was coming, and talk to him now or listen to him talk now, you won't see a ton of difference in the kinds of things that he's driven by, interested in. He's always kind of seen Nvidia as essentially a computing company. Games happened to be the kind of early place that they could make a business out of when they came up with this idea for discrete graphics processing chips. That also turned out to be great for AI training and AI workloads. So, but I think he kind of had this vision for a long time, and you could see how the company was investing in that for a long time. But like all technologies need some kind of catalyst, even if all the groundwork is there. And so when ChatGPT actually publicly launched, that was late 22. And then it just kind of, the world all of a sudden woke up to this idea of generative AI and what it could do. And then all the big companies just started flooding so much money into it. And then that's when you saw Nvidia sales just take off like a rocket, And so you've had this company, it's been interesting to watch this company go from this kind of niche chip company to now it's the world's most valuable company by actually quite a margin. I think it's still the only $4 trillion company at the moment. Apple's below there, high three, and it's of those companies that are commanding these market caps in the trillions. Nvidia for a while was among the smallest in revenue, like in terms of the actual business, but that business is growing so much still, even if it's not like the triple digits we saw early in the AI era. It's just growing phenomenally still. There's no signs really of the investments in AI that drive their sales. That's not slacking yet, and we're into arguably roughly year 3 of this type of cycle.
That's super fascinating. And you've watched them since they were small. They would have their conferences in probably a very small venue. And now it feels like it's probably bigger than like Apple conferences. Right?
Oh, yeah. I mean, they just had their GTC conference this week. And I've been going to that for years. So, I mean, as a comparison, all the times I've gone, it's always been in the San Jose Convention Center. And they used to solidly fill like one kind of auditorium with the keynote, and they had a solid base of fans and developers. It wasn't
sure.
Now they fill up a sports arena, the SAP Center. There's more than 30,000 people in downtown San Jose going all over the place. And honestly, and if you go to enough of these conferences, there's the official number, like people that are registered to attend and be a part of the conference, but you've also got a lot of adjacent activities. There's a lot of companies that use the opportunity and book places nearby so they can take meetings because they know lots of business people are in town, journalists are in town, and so forth. And so you've got those official numbers probably undercount the activity somewhat. If you walked around, I was walking around down there earlier this week. It's like Disneyland.
That's wild. And I didn't watch all of that. We had a conference out in Vegas the last few days, but I do see the headlines and he says, Jensen said something like, well, we're going to do like $1 trillion in sales. And I think last year around this time, it was like $500 billion. So that's still, I don't know. It's hard to get my mind wrapped around that. What else were the takeaways for you?
Well, it's a big number, and it landed differently because when he gave that $500 billion number it was like a little over 6 months ago at this conference.
Oh, wow.
That was for 2 of their chip families, essentially Blackwell and Rubin.
Yeah.
Through the end of, essentially through the end of this year.
Okay.
When he gave this $1 trillion number, it was still for those 2 chip families, but the time frame was actually through 27.
Okay.
So it optically looked like he was doubling this forecast in 6 months.
I see. It's a different time frame.
Different time frame, but it's still really large. It was actually,
it's still very large.
Wall Street estimates were for the period he was talking about, he was still essentially guiding up in the parlance. But I think, it also when I saw that, I began to think, really, because here'd be the challenge. Like theoretically, let's say they had orders to like actually double that in the original time frame. I don't know that they could ship that, because it's not just Nvidia's ability to get its chips made. It has to acquire all these other components because it's selling backlog systems now. And like here's one aspect, memory, which you absolutely need a lot of memory in these systems.
Sure.
And that is like super constrained. The prices of that kind of memory are just skyrocketing. We saw Micron reported their earnings Wednesday. And they're reporting growth I've never seen from them, and I've covered them a long time. And so even if, let's say, Nvidia had like doubled their order book for that original period in the 6 months, I don't think they could have shipped it. So I think they have to deal with, honestly, some of the same bottlenecks that because they're now shipping these systems that are so complex, and they have to get the supply. Sure. And they're in a great position for that supply because their free cash flow is just growing it by an insane amount. But there's still like time to produce memory chips. It takes time to produce these other components. So I think the bottleneck still is not so much demand; it's the ability to fulfill that demand for what are like really complex, like basically supercomputers.
Yeah. So do you think that's just like Micron and SK Hynix and Samsung, they just can't produce this fast enough? Is that kind of what it is?
Well, I think they're producing as fast as they can, but they have to make some interesting choices, because like the type of memory that goes into like the racks that Nvidia is making, this is called HBM. It's a type of DRAM, but it essentially consumes more production materials and essentially more production capacity to produce that.
Yeah.
So as they're racing to produce the super high value memory that's used in AI, that means they can produce less of the type of RAM that's going to go into your PC, into your Mac.
I see.
And so that's causing this tremendous shortage across, and almost everybody in electronics is feeling it. The ones feeling it the worst are like the companies that make the low end of the smartphone category, for instance, where the prices aren't that big. The forecast, the third party firms that forecast these things keep like cutting down their sales forecasts for this year, because they're not going to get enough memory to make their devices, and they're going to have to raise their prices in a way that's going to they have their prices to customers. So you're seeing this kind of knock-on effect. And the rub is that it takes a lot of time to make a chip fab. You don't throw up a chip fab overnight. It actually is measured in years, from groundbreaking to actually producing and shipping chips out of it. In fact, Micron, I think, broke ground. They're building a site up in upstate New York that they've broken ground on. That's not expected to, I think, volume ship until, I want to say, 2028. I might have that wrong.
Oh, wow.
But it's years. You have to get the stuff built, tools in there. And so even with the demand soaring the way it is, you can only ramp that up so fast. And then if you're in the memory business, and I don't know if you've looked at this like historically for memory, that has long been a very big boom bust business. Prices surge, then they fall. So memory producers will sometimes have years where they lose money, and even if the prices drop so much. And so
very cyclical.
So right now they're enjoying this like huge upswing, but the trick is like, okay, if you see prices here, you think, okay, if we expand our capacity, we can make a lot more money, sell a lot more chips. But what happens if the prices collapse before you get your new capacity online? That's always been their problem of like how to match that, because it's hard to match. So you're actually seeing Micron said something really interesting in their call on Wednesday. They signed their first 5-year supply deal.
Oh, wow. So it's gone out to 5 years, because I feel like it was 3 years and now it's 5.
Actually, in memory, it's usually been 1, if that.
Yeah.
and a lot of memory happens on the spot market, like, within a few months. And so to get like a 5-year deal is pretty notable. And it was kind of a sign that if you're and they didn't say which company did that, but if you're a company that's like, okay, I'm going to commit to 5 years, at whatever price they landed, that means there was pretty good visibility that the shortage was going to be lasting a while. Like you would not sign a 5-year deal if you had intel that the shortage would ease up next year.
Yeah.
So that was kind of like, that was a great sign, I think, for the memory companies. It was not a great sign of having to buy memory too, because this is not going to be something over in 26.
Interesting. And so Nvidia is kind of in that mix because they have to buy the memory, they have to like add it, and then Taiwan Semi is kind of in that mix too. I guess they're like different stacks, different places on the stack of technology.
Yeah.
And then you have these hyperscalers that, I mean, they're spending a lot of money. The Microsofts and the Metas and the Googles of the world. So what do you think of all this? And we've seen Nvidia have great results, great numbers, but their stock is just kind of just going sideways. It's not terrible, and the valuation doesn't look terrible, but it's just kind of moving sideways. And then you see software in some cases just get completely crushed. And I don't know if your thoughts are that that's mainly because of this fear over Claude and what AI can do to replace software, but can you comment on that?
Totally. Well, I'll put a pin in software and come back to it like Nvidia is, in fact, their PE dropped below the S&P 500s for the first time in like at least more than a decade, according to the data I was looking at. So they're really cheap on that basis. I think the question that like investors are having is, one, how long does this last? Like, how long can this really last at these like insanely big numbers? And if you made a chart, sorry, not a map, of the free cash flow, and you took Amazon, Microsoft, Google, Meta, and Oracle, and like charted their free cash flow for the last 3 years, and then what it's going to be this year and next year, it's going like this, because they're putting so much CapEx into AI investments, a lot of which goes to Nvidia. And if you look at Nvidia's free cash flow, it's going like
just
this.
gone straight up.
So essentially, we're seeing this free cash flow transfer from Nvidia's biggest customers, which are also some of the biggest companies on the planet, to Nvidia. To the point that Oracle is actually now burning cash, which I couldn't find evidence of them doing that, at least in the data I had that went back to the early 90s. Amazon is likely to burn cash this year, based on where estimates were for their, what they've said on CapEx and where the operating cash flows are.
Sure.
That's that alone. And then the other ones that are watching it go down, it makes you think, okay, how long can this really go? Like, how long are companies going to spend at this level?
Sure.
And then adding to that, like Micron, when they reported, they projected their gross margin for this current quarter was going to be 81%.
Oh, wow.
Which, again, something I couldn't find evidence that they've ever come near that in the past.
Yeah.
And it's, basic math, like 100% is your top. So if you're an investor thinking, okay, are we near like peak gross margin, and the memory business drives peak gross margin, it's a turning point for the stocks often, then you're going like, okay, well, this can only go up so much.
Yeah, you're kind of capped because like you can't just you can't get something for free and then sell it.
There's no GMs of 100% anywhere. Like, it's so I think you had these interesting data points this week that kind of drew that question of, these numbers are really big and they don't seem to be going down, but really how long do they go? And if you're an investor thinking, okay, well, I want to get like, I want a lot of upside over the next 12 months. I think, well, maybe these guys won't get that much upside because at some point there's not much more spending that can come into the system. At least
interesting.
that way of thinking. So I think that's the biggest thing weighing on it. And then on top of it, like essentially Nvidia at four whatever trillion that they're at now, they're just too big to like escape the other broader market dynamics we're seeing. You know, obviously the market's reacting to the war in Iran and what oil prices are doing, and stocks down. They're not going to be free of that. On top of like whatever types of supply chain risks that causes, and it does cause some. So you've got, I think right now it's not a great time for stocks in general. And then with some of these questions about, okay, where can AI demand really go from here? And how much upside, I think that's kind of what's been weighing on them. And then you wanted to talk about software, right?
Well, yeah, and I guess tying in with the software is credit and private credit. So like there's been some angst and worry about private credit and not so much the large side. I'm honestly not that worried about, some of these large software, but then, I guess there is the question, like if someone's, you've got a large company that's using 100 seats of Salesforce and they can use Claude, do they now only need 50 seats or 80 seats? And so it's not that Salesforce goes away, but like that's a hit. And then I guess the smaller companies, it's just that, they're like how much debt they're taking is a little bit worrisome. And by the way, it's not cheap debt either. The private credit debt is not cheap. So what do you think?
Well, I think software has been in a tough spot because, and a lot of it, and it started actually last year. Like I started noticing what was happening with those stocks, like in mid 25, where you had, it started with this idea that, hey, if all these tools like Claude and these other AI tools can help people like just come up with their own apps and software, is there going to be a market for, these kind of these types of apps that businesses use? Why couldn't a business vibe code its own Salesforce or Workday, for instance? That was kind of the idea that started by pushing these down. And then it was kind of fueled by, you saw lots of, the press releases of these companies claiming what they could do. And then like you'd see tweets from, kind of the startup and venture community saying, oh yes, I spent the weekend and built my own CRM,
Oh yeah.
And I don't know how to code. So that was kind of the narrative that started weighing on it. And I think it weighed on it so much that like you started to see larger shareholders, especially as they closed out the year and looked at like kind of how these stocks have behaved. You might, if you're like a large PM, let's say, and you have in your, you have like a lot of Salesforce or whatever in your portfolio, you may not buy into that idea. Yeah. But you're convinced that narrative is going to be sticking, for this next year, as like Anthropic and OpenAI are working to go public and just pushing out all these products and services and capabilities. You're going to say, well, wait a second. Well, maybe that won't happen, but this stock is not going to go up because you understand what the narrative is going to do. So even if you don't buy it, you're essentially basing like what you're thinking on what other people are going to do. Sure. So if you think the narrative sticks, you get out yourself. And so I think that's why that contributed to why they've continued to struggle. Even as those stocks get to like what look like historically low valuations.
Really low.
I don't personally, I think my view is more nuanced. I think you can take, there's a lot of SaaS companies and there's like big ones, small ones, everything in between. Yeah. Some are kind of like essentially single point type solution apps. Some are like very big platforms. Yeah. So I think there's a spectrum of who's more exposed to the potential of AI disruption. Because I wouldn't sit here and say none of them are exposed. I think some will be. Sure. But I do think that, when you look at kind of the big platforms, the big ones that use that are especially dealing in types of data that you can't, like, it would be hard to vibe code your way around.
Mm.
And if you're dealing with regulated issues, financial, human resources, like it's very
Yeah.
hard for you to imagine a big company deciding, hey, we're going to cut off Workday and vibe code our own, because there's so much, you know, it's not the fact that Workday has software engineers to make the code. It's because they have all this expertise to like help companies get their payroll right and with like all the things that they manage that like is something you want to do as your own company necessarily.
Interesting.
So I think that those are harder things to disrupt.
Yeah.
But because
And
they're all in this kind of basket.
yeah, that's interesting. Well, and some of those companies have got a bigger moat, right? So they've got some different things. They kind of like, hey, it's just harder to get in there, right? If you're just
There's like proprietary types of data and access. What I think is going to happen is that I think the ones that survive are the ones where they're going to figure out how to. I think there needs to be evolution of their pricing model, because, like you said, like the ones that are dependent on like seat-based models, that's going to have some pressures, even if there's not huge parts of AI disruption, because you might have big customers still might be trimming down their own sizes for whatever reason. And so I think you'll see some evolution in how they price so that they can get some value in, like as one idea, a company might decide they want to have their own AI agents to access this type of information.
Yeah.
And so if you're a Workday customer and you've made a AI agent that you want to be able to pull from your data in Workday,
sure.
There's going to be like Workday's going to need to figure out a way to make, to essentially monetize that kind of thing. Salesforce and everything. I think they're working on those sorts of things. I think it'll take some time for it to see how that's going to impact. So I think there's some questions about how that business is going to evolve that are fair questions. I don't see a lot of them going away. No, I just think right now the market's kind of figuring out what kind of place these companies are going to have in this.
Sure. Trying to figure out like who the winners are and who the losers are going to be, but it's still cloudy, right? They don't know.
Right. I think so, because we're still like a lot of big companies are still in the experimentation phase.
Yeah.
So the big companies that are big customers of all these SaaS companies, they're figuring out how they're going to have AI work for them, what they're going to do, and then in turn that'll impact. Okay, what do we do with our own SaaS contracts?
Sure.
So I think it just takes time, because like companies and enterprises, that stuff moves slowly. There's a lot of things that have to happen. And in cases where you're trying to get a large employee base to use AI more, making people change their work habits happens really slowly. That's something I've seen just over. And it's one thing if you're a small company of 10 people and you're all in the same room, like a startup.
Yeah.
Quickly, hey, we're going to do this. But when you're a large company with a large workforce and everybody's accustomed to how they work, like getting a big change just takes time.
Sure. Well, let's talk about that a little bit, because I know the very large companies, it's just the cost to switch is pretty high. And as you say, for a very large company to switch, I mean, that's just a lot. I know we had Dan Ives on one of our prior episodes, and he kind of talks about some of those things. And so I'm thinking along the lines of Microsoft and Amazon, that, there's AWS and some of these, it's probably sticky. But then I was thinking about Palantir. They're kind of a little bit different space. They're kind of adjacent to, intelligence gathering for, military contracts. But they also have kind of like this integrated operating system. They're going to use the AI. It's going to keep it private. It's not going to reside in the cloud. That seems to me really, really sticky. But I know the valuation is not cheap, right? So any way you want to look at that, but they've been able to do okay. I mean, do you have thoughts on kind of and again, it's kind of like the wider moats for some of those companies, but I don't know. I I guess they could be disrupted at some point too. What do you
Well,
think?
when you're in tech, you're open, theoretically, you're open to any kind of disruption at any point.
Yeah.
Something wrong with a better idea, but the trick is getting that idea, distributed into the work system. So if it's software that your business is,
Mm-hmm.
then yeah, you need, new things may come up, but it kind of depends on like how mission critical what you're offering is to your customers.
Yeah.
I can't say I'm a huge expert on Palantir. I think I think roughly still half their business is government contracting.
Sure.
I don't see that. I think they're, especially in the current, whatever. I think probably they seem to be doing fine, whatever the administration, but that doesn't tend to move quickly. In terms of their private business, yeah, I think they're still small enough that it's still kind of a growth story.
Mm.
So they're in a very different position than I think some of the more mature SaaS companies who have very large businesses that they have to, kind of have evolved with. Palantir's got, is in the fortunate spot of it's still kind of fairly new with a lot of these companies, so they can sort of evolve their offering as the marketplace evolves. So I got a feeling they're going to be fine.
Yeah.
And keep growing doesn't mean they're not going to have some of their own risks. I know that,
Sure.
but that I think probably their biggest risk is the stock, even though it's taken, I think a little bit, it's come a little bit down a bit this year. It's still the wildly expensive stock. So when you're that expensive, like anything takes you down. Like,
yeah,
if the street wants 50% growth and you give them
49.5,
yeah.
then it's like, whoa, I'm worried.
Exactly. So I think that's a different dynamic. And they'll probably have quarters like that, I'm sure, because that's just what happens. But they seem to be in a good spot, especially on their public side.
Yeah. It's fascinating. I mean, and so I feel like some of these names, and it's just, again, we don't know, but like Intuit is one. We don't own it right now, but we owned it before. But like, I don't know. It feels like that could be disrupted. But Adobe, and how often does Adobe trade at like 11 times forward earnings or 12 times? I mean, it could be lower than that. I mean, it feels fairly cheap for something that, their margins are still good. But I don't know. Was that the baby going out with the bathwater with everything else? Do you think?
There might be some element of that. I think the trick with a company like Adobe is that if you look at a lot of these SaaS companies, like what they do is not widely understood. Like any particular company that like maybe does, workflow automation or something, like there's a lot of them serve like valuable like kind of niches, but niches that aren't like maybe as widely understood by like your average investor.
Oh,
Adobe, everybody knows Adobe's Photoshop.
Yeah.
Obviously, but like I think there's a wider familiarity with what Adobe does. And so if you think of Adobe as the Photoshop company, and then all of a sudden seeing Nano Banana, Sora, all these other tools where people can be like, oh, to make me a video doing this or make me a picture doing this, and it happens. I think it becomes easier to start questioning what's going to be the ultimate value of Adobe in this AI world. Even like I said, even though like they do have a little more complicated business than that, and they have, I think also because they have a decent percentage of business that's kind of small business, individual type based. That's one where theoretically you could see more disruption, because if you're a independent graphic designer, it'll be X amount for the tools it has, but you see, oh wait, there's some free or very cheap Gen AI tools that can save me some money. That could be a compelling case, and enough people make that choice. That does hurt Adobe. I don't know what number of people need to make that choice that really hurts them. But again, it's like some of it comes down to the fact that because their core business is pretty widely understood, and because the thing the stuff that goes viral with AI now is when,
Mm.
you know, a company puts out something where you can make a funny picture of yourself or video.
Yeah.
It turns into an easy sell case for Adobe.
Yeah.
And so I think that's the kind of thing they have to struggle with on the narrative basis.
Oh, that's so interesting. It's fascinating. Well, and I think sometimes we as investors and maybe we as consumers, we extrapolate. Sometimes we extrapolate too much, sometimes too little.
Yeah.
But you hear the chatter about like in Hollywood, like are we still going to have as many actors that are paid as well as they are in the future? We can have AI. We can create our own digital actors that can perform and that's not just that, but the special effects and everything. I just think of the movies I watch with my family, and you see all the credits of all the different special effects studios. I'm like, wow, are those going to go away? It seems like they might, some of them.
It's that under the hood stuff. In Hollywood terminology, it's called below the line. Where you have, if you watch a movie, credits roll, you've got your actors, directors, like some are all considered above the line, like the top end professionals, and you have all these ones below that are these like kind of technical hands that help. And that includes everything from like assistant camera people that are on the set. Computer people. So that's actually more disruptive because there's a few if any movie, like the ratio of actors to all those other people, there's way more jobs, jobs in those. And so now I don't know that like generative AI automatically wipes out every single one of those jobs, but let's say in your average big budget effects spectacle movie, you can have Gen AI tools do the work of, a third of the staff.
Sure.
Instead of having people do this like really, tedious fine tune that, you can, have Gen AI tools take care of that. I think that's the kind of thing that's probably more likely on the disruptive than all of a sudden us going to, watching movies with full AI actors and even movies made by Gen AI tools. I got a feeling those are going to be pretty awful.
Probably. At least for now.
But I think the Hollywood's right to worry about, okay, what does our employment base look like? And this may like stretch beyond Hollywood, because like I was listening to another podcast with, I think it was Ben Affleck, who was talking about, and he has an AI company that I think he sold to Netflix actually. That did some of this like kind of post-production work, like had AI take care of some of this post-production work. The example he gave was that, we used to have this work go to, a bunch of programmers in Singapore for, $2-3 an hour or whatever they pay. But now it can happen like immediately for cheaper, so that's the kind of thing that I think that's kind of what I consider the low hanging fruit. Where that might happen. But where that goes ultimately is an interesting question. At the end of the day, anything, whether it's made with AI or the old fashioned way, any show or movie's got to be good.
Of course.
I think what I actually think the problem will be is that how the good stuff can break out, because I think we're going to see an influx of just AI slop, because if it becomes possible for you and I, let's say, to like use a couple AI tools and make some movie, some movie that we throw out launch it on Amazon for people to, and if a bunch of people are doing that, chances are it's not going to be that good. I mean, you and I aren't filmmakers, whatever. So, but if you get like this, if for every professionally made quality movie, there's now 20 times the amount of stuff that's like just flooding into the recommendation engines and the catalogs, it's going to get harder for good stuff to stand out. And I think that's going to be the interesting challenge that AI is going to like multiply content creation because it makes it so easy to do. doesn't mean it's going to be good content.
It's interesting. Well, and I think about the whole social media aspect of that too, because you could have something that maybe looks okay. It doesn't look great, but for whatever reason, it goes viral and then it becomes popular. And then you get other people like, oh, I'm going to do that too. Right. So,
and then like
there's a multiplier effect of it. Right.
Exactly. Yeah. I think AI, like, just because something becomes easy to do doesn't mean it's easier to make something good.
Yeah.
So I think we're going to see, I think it's going to be hard for us as consumers in the future. I think to suss out and pick, just if we sit back at your TV one night, pull up whatever menu, Amazon, Netflix, whatever, the chances that we have more stuff, we're going to have more stuff to pick from. We're not necessarily going to have more quality stuff to pick from. But how do we find that?
How do we find it? Yeah, because I feel like there's going to be a lot of bad quality that we need to have an algorithm to help us to find the good stuff. Maybe.
Yeah, and then somebody figures out to tweak the algorithm. So.
Oh, interesting.
It'll be a interesting cat and mouse, I think.
So I got to tell you, I am not a programmer, but like I've got a little mini AI setup here that is helping. I'm doing some machine learning. I'm using AI a lot as the assistant. I feel like that's super helpful as the assistant. Like, okay, here's what you're going to do. Here's the code, copy, paste. It is amazing. I am being amazed. And so I'm working with a personal trainer. I'm trying to, lose a little bit of weight. And so the personal trainer is having me fill out these sheets. It's a food journal. Like, what did you eat for breakfast? What did you eat for lunch? How many glasses of water did you have? All of that, how stressed you feel. And it's the sheet. And, I just thought, well, let's just see what we can do. I took a picture of it, uploaded it to Claude. Less than 5 minutes. It was probably more like 3 minutes. It said, here it is. Oh, and here's the website you're going to use. And now I'm using it on my phone and it actually looks great. I showed my trainer and he was like, wow, that's incredible. So
it formed an eating plan for you?
It's a journal. So every day I can do the journal of what foods, what exercise, how much water I'm drinking.
Sure.
And, it can send a report. I can press a button and it will send a PDF, to whoever I want to. So if I want to send it to the trainer, I don't have to bring all these papers in. So it's something small, but like the fact that I was able to do that in just a few minutes is pretty incredible. I think a lot of people don't always know what's out there. But I'm sure you are looking at this a lot and you're probably learning about all kinds of tools. I know, I don't know if you talk with Joanna Stern. She's also Wall Street Journal and technology. She sometimes
left and started her own thing, actually. But yes.
Oh, she did. Well, I know that she would do some different things, talking about videos and whatnot. But I mean, so you tell me, what are the best use cases for the tools that are out there and for people that I know? I know we have a lot of advisors, by the way, that use note takers, like on a Zoom meeting. Lots of people using note takers. In some cases, there's more note takers than there are people. So.
Yeah. I've dabbled with some of those things. I probably use it mostly for research in my particular use case. I have to be, when you're people in my particular field, we have to be careful because, well, one, you want to make sure information is good and quality. So you can't just get something from any chat bot and assume, oh, that's good, I'll put it into a column. So there's still like back, checking that has to happen.
Sure.
Then the other trick is that from people I know personally, I think the widest use case right now for, ChatGPT, Gemini, Claude, whatever, are people writing emails to like for work or whatever.
Yeah.
And, because for most people, writing is a real chore. I mean, it's obviously how I make my living, but
sure.
for most,
Yeah.
I have to send an email to 10 workers, with this proposal. So that I think has been the widest use case by far, hands down.
Oh yeah. I use it all the time for help. I don't rely 100% on it, but I feel like it helps a lot with grammar and with the flow and making sure that it's compliant, for people to read.
For sure. And the trick, of course, is in so doing that, people are also getting the nose for, hey, this doesn't sound like this person. This sounds like
it sounds like someone else wrote it. That sounds too good.
Yeah. So I think the struggle, obviously, like the thing I have to be careful of given my profession is I cannot use output and just flow it into something I'm writing.
Yeah.
Unless, of course, I'm citing it. If I said, hey, I asked ChatGPT this and this is what it told me. But
sure.
Otherwise, I can't do that because honestly, that's how I derive my value. And I have to, like everybody else, I think, I ultimately have to stay ahead of what AI can do, because if I don't, then I make myself obsolete. I have to keep producing stuff of a quality that somebody else can't just get out of a chatbot. I think the challenge we're gonna face is how do we adopt use of these tools, but keep. This is gonna sound really, I don't know the right word. How do we keep our humanity? How do we not turn a world into just AI slop where it's just talking to each other instead of us talking to each other? And so I think when you see the technology that's new like this, it's easy to get excited about, hey, this can make things easier, and it does. And that's but I think there's also we're still in the phase of figuring out how should we adopt this? What should we use it for? What should we not use it for?
Yeah.
And those are the questions I think we're going to be, all of us, as individuals, and I think broader as society, are going to be grappling with for a while, is where do we want this to go?
Yeah. That makes a whole lot of sense. And I feel like I'm glad you mentioned the humanity part, because I feel like we really need to draw a line. I feel like there's certain areas where we don't want to go there with AI, right? I mean, human connection, families, it's bad enough that, there's a lot of people that are just flat out addicted to social media or just using their phone, right? So do we move even further away from human connection? That'd be sad. I mean, a few days ago, it was at this conference down in Vegas. It was a great conference, all about ETFs. It was an ETF conference. And there was a robot, and the robot was looking at people and looking at their expressions, and she was talking. It just felt really weird. So, and I get it. I mean, if someone has a robot and they want to help, hey, clean the house, fold the clothes. I mean, I get all of that, but it just seems a little strange.
Yeah.
If you're going to go too far, right?
Yeah. And I think technology adoption happens in those kind of lurches, and some lurch back. We saw the same thing when Facebook was new and social networking was new.
Yeah.
It was an exciting thing. You could reconnect with high school friends or something that you lost contact with. And then, and so for a while it felt like almost this innocent thing. And then all of a sudden we get into oh, wait a second, you can watch families fracture over this because people argue over this, or does it impact elections or the health of the political system, all these downsides that we're learning about, plus the addiction issues. So I don't think it's going to be different in that way. Where obviously there's a lot of good things that we can do with it. There's a lot of bad things to do with it.
Sure.
How do we balance that? It's over the long course of time, I think people tend to figure that out.
Yeah.
But it's a really messy process. Humanity's a messy thing. So it's going to be messy, I think.
Yeah, that's a good point. I mean, we all choose, right? We're all, it's not like a collective that we're all going to choose the right thing every single time, because some people won't. And then we learn, and, hopefully, we get scraped up and we're like, well, I'm not going to do that again. Right. Let's hopefully collectively learn some of those things. Well, this has been super, super helpful. I know we're almost out of time here. I really just have one other question. And that's, of all the tech companies that you're looking at, and again, I'm going to put full disclosure out there. This is not a recommendation, but like, knowing what you know, if you had to choose like one or two or three companies, like you had to hold on to for the next 5 to 10 years, what would they be and why?
I can't go there well because
okay.
Yeah, I mean, the Wall Street Journal is very strict. We don't make
How about the types of companies? So don't name don't name anything specific, but just the types of things that look really, really interesting to you. And then maybe mention like what kind of worries you. We already talked a little bit about what worries you, but
what do you think? Well, there's still a lot of, if you want to look at areas where, tech and the physical world are going to be meeting, that there's a lot of potentially interesting things there, and ranges everything from like, I think one of the hottest stocks lately has been Caterpillar, and that's obviously
all the
AI, the construction of data centers. And that sort of, where that goes, I don't really know. Like,
sure,
particular stock, but I think there's a lot of. I think the early days of AI we've seen, it's been mostly a digital product. You and I are going to it on our phones or computers, and making apps, asking, forming emails, whatever we're doing. I think as the technology expands out into the physical world, there's a lot of interesting ideas there that are going to that have the potential to play out, that we're still, I think, very not even seen yet, or still kind of very early.
Interesting.
Self-driving cars is a fascinating field to me, because, and I'm in San Francisco, so I see them.
Sure.
I'm taking them sometimes. There's an assumption that market's already settled. I don't think it is. Obviously, obviously Waymo's like way ahead. But I think where this evolves, especially not just in taxis, but like in personal automobiles, where this ultimately goes, it's a multi-year process.
Sure.
And what's going to happen between here and that end point, when we all can have like cars just take us places? I think there's going to be a lot of interesting potential there, because you've got, especially in this country where we're so attached to our cars, that the change is going to come slow, even if the technology is there. But I think I can see it as one of those things where it gets to a point where all of a sudden it starts getting adopted really fast. Because all the potential use cases and all the potential cases for like improved safety and whatever, I'm interested in how that area evolves. And then on top of that, and that has all these adjacent things. Our aerial drones going to bring us our packages. That's all that stuff's very early in development. I see some interesting use cases and a lot of challenges. I think the time to really, from what I've seen, is that the time to really start looking at these things is still in the area where they're still figuring out like how to overcome some of the challenges. And once they get them overcome, you start to see adoption take off more.
Super fascinating. This has been fantastic. Thank you so much for joining us today, Dan Gallagher, technology columnist for Heard on the Street, Wall Street Journal. Thanks for joining us, Dan.
Thanks for having me. It was great to connect with you.
Come and dance on our floor. Take a step that is new.